Here's exactly how I'd structure a 100K crypto portfolio today. Why on earth would you even listen to me? Well, I've grown from literally zero to over 7-figure crypto portfolio over the last 9 years. I started out with nothing and grew this up based on properly allocating risk to reward. The big thing which I'm about to share with you is that people don't understand is risk to reward. People risk a lot of money trying to bet on high value meme coins, low cap meme coins, different AI projects, AI bots. These are extremely risky. And if the reward profile isn't there, you're not going to win. I think about allocating my portfolio now at 100K, even up to $1 million when I'm looking at allocating and helping our clients, is actually allocating on the sectors that are going to be the best reward without taking as much risk. That is how you win. The game has changed in crypto. No longer can you just spend a bunch of money over different low cap coins and hope for the best, especially when you're investing with size. So the biggest one I have to have is size, all right? If you're allocating like 1%, 0.5%, 0.1% on these random altcoins, that's not going to make a material impact on your portfolio. You have to look at your entire portfolio allocation. Now, the biggest one, I always start with BTC, all right? I think Bitcoin, you should have at least 50% of your portfolio in Bitcoin. And I think about Bitcoin and altcoins as two separate asset classes, right? BTC versus alts are two separate asset classes. People don't understand this. Without Bitcoin, altcoins will not perform. If Bitcoin is not going up, your altcoins will not perform no matter how crazy you think and how good they are. Bitcoin is digital gold and all altcoin pairs are usually denominated in Bitcoin. If Bitcoin's in a bear market, everything's in a bear market. Bitcoin for me is the thing that will continue to compound over time, and it's digital gold. This is the thing I want to stack, and I'm buying as much as I can of it right now because I believe it's going to $1 million one day. Now, you're not going to get as much of a return, obviously, if you get into some good altcoins. I get that. That's why I allocate the remainder of my portfolio into a few different sectors. The biggest one that we're allocating very heavy on is layer ones. All right. Now, layer ones are essentially the app store to Web3. Think Ethereum, Solana, Sui. There's a bunch like Cardano. These layer ones are that road that the applications get built on. It's the cars that drive on top. This is where the VC money is going. So I would probably think about allocating at least sort of 25, maybe even more, 30% to layer ones. Reason being is that, again, this is where the big money flows. If you think about where the big money right now is coming from institutions, it's all Bitcoin. All right. The US government is not buying, and countries are not buying random like Solana projects. But VCs are. Then you can split across different projects. You might go payments layers. Maybe it's like some of the old 2017 projects. You might include XRP, Cardano. Maybe there's also DeFi. I think DeFi is underrated. I'm pretty heavy in DeFi. There's a couple of good projects there. Syrup that I've been investing in for a long time. DeFi is a bit underrated, and I follow these projects because of the fundamental value. If you go down to meme coins, if you go down to AI projects, these are speculative, all right? They're speculative because they don't have revenue, they don't have protocols that generate token buybacks, they don't have anything that's generating anything outside of community value. I'm not saying they don't perform, they should perform really well if you're in the right ones, but I only allocate a small amount here, all right? So DeFi, let's say that. That is how I build a 100K portfolio.